I got the mic here. So, oh boy, what a day in the market on Friday. Boy, they like to run us up and sell us off and run us back up. When we saw the unemployment rate drop, got really good data. Again, the data has all of a sudden magically turned. Isn't it amazing since they did that 50 basis point cut? It's an emergency cut. We got to do it. And data just flips around as soon as they do the cut. It's amazing how that happens. But again, I always say it doesn't matter if you believe the data. As long as the market likes it, that's all that matters. Okay, we all know that. Okay, so again, we'll go through your questions today. Some pertaining to the market, some not pertaining to the market. You have some pretty good ones out there. Remember, please hit that like and subscribe button if you do get anything out of this. I really appreciate it. As usual, let's jump right in and see what the first one is. Mike, could you please give some details about this year-end rally you keep referring to? Why does it happen, when, etc.? And I'm actually going to start off with part of a video I did in a members video right before the fourth quarter rally last year, and then I'll talk about some more stuff about why this happened.
The other big thing in November, December, into January, that period starting middle of November, right, till the middle of January, represents the most holidays by a significant margin. And it's not just the biggest holidays, but if you do look at it in a volume-weighted, what we call volume-weighted time, which is you're looking at the amount of trading that's happening per amount of time, it's almost 50% other periods of the year. There's dramatically less time, but the volatility is priced for regular time. And that reduction of volatility, when paired with these other flows, can drive all of these bond and charm flows. Not to mention December and January, the most open interest of the year, the most skew of the year, right? And those bond and charm flows are also very, very supportive during that period as well. So you take those two big things together, November, December, and early January. There's a reason seasonality exists. It's not a magical construct. People laugh at seasonality because they don't get it. The seasonality matters, and specific to dates, not just the calendar month.
And now this year is going to be a little bit different because we do have an election, right? So every 4 years. And you can see, again, we don't have a current president running. Some people say the current VP running kind of counts for that. But either way, you can kind of see if it's this one, if we're sitting here with basically an open field, which would be this one at the bottom, it's kind of like, it's a little rougher, as you can see. But when you sit here and think, okay, the other ones, they go up November, December's kind of rough. We usually do get a sell-off right after the election, all right? And then you go over to the left where it comes into January, and you can see the open field. Well, it looks pretty bad when it goes downhill. I'm not sure if that just has to do with uncertainty about who this person is, because the current president, you kind of know what they're going to be doing, and the market hates uncertainty, right? But when you look at, what are the best months, okay? And you look at this right here, again, you're going to see November and December, right? What are the up months? November, December, NASDAQ, S&P, New York Stock Exchange, okay? When we end up scrolling over here, and again, I'm going in just a minute why some of this stuff happens, but when you're talking about best 3 months, right? You see November on all three of them, okay? December, again, can be iffy. You either get the Christmas rally or you don't. That's what Jim was talking about. Jim talking about, the flows and things of that nature. So if the flows support them, yes, we do. Now, it's not just about these. When you go into the Russell, for example, you see two of the best months, November and December, for small caps. And we're not talking about up 10% or anything like that. But when you look over here at the gains, it's not bad. I mean, it's not too bad, to say the least. So, again, up months can be big. Last year was a huge one. Year before that, I don't think it was. But some of the things that are happening here is everything I've read. So, hedge funds, they'll do their tax loss harvesting in September, October-ish, somewhere around there. Also, you're in this blackout window for stock buyback, so that ends usually around October 25th-ish, somewhere in that area, right at the end of October. You're also doing what? What's happening next week? We're kicking off earnings with the banks on Friday, right? So then all of a sudden you're going to be looking at going through the 18th, the 21st, December 2nd, right? All of these large companies will be reporting earnings. If they're good, bad, whatever, I don't think it's really going to matter, to be honest with you. I think we've seen that many times. But as long as they're okay, right, and those flows continue in, we start seeing people buying up calls and doing all their fun stuff, heading in, trying to get their fourth quarter rallies, and then get their year-end bonus and all that fun stuff. That's why you normally see it happen, and it happens a lot. I mean, I've done videos on it. So, again, we'll see. That's why, for me, I hope we stay sideways for October. Don't do some crazy rally in October, because then maybe that kind of negates what's going to happen in November, December. It could absolutely do that, right? Same way we sold off early before coming into September, kind of threw all that off, threw the whole seasonality thing off. So, that's what we got to see. But I'll continue to pay attention to the flows, things like that. It's going to be happening and stuff. So we'll see. But let me know if you got any inputs on that as well. Now, next one's from Jeffrey, and he says, my question is, what is the anatomy of trend lines and support and resistance lines Is it numerical and or psychological? That's a very good question. And the truth is, and for me, I say it's psychological. You'll get different answers from different people. But when you look at it on a chart, for example, just over the years, as more people have gotten involved in the markets, as algos have taken over and everything, there's just certain, whether it's a support and resistance line, whether it is a trend line, whether it's ascending, descending, whatever. And so people know, they see it on the chart, it's set, right? Where orders are basically being placed at that level saying it's going to bounce, right? And so as more people come in the market, they've become more prevalent. Now, you got some people who don't even use them, ever use them, right? They don't believe in it. Same way they don't use moving averages. You know, it is what it is. You know, but when you look at this, let me show you what I'm talking about. I've kind of showed some of you this before, but if you're new, these longer term trend lines especially, look at Nike. This thing goes back to 1994. And you can see good times, bad times, it just kept bouncing, went on a crazy run after the 08 crash, but then came back down. Oh, look at that right there. And I was like, watch this, see if it hits, because if it falls beneath, it's going to be in a hurt locker. And guess what happened? It bounced off of it twice. Is it magic? I don't know. You know, obviously not. And so it bounced, and now, of course, it's been up pretty big since then, right? It's almost 30% move up off of that trend line. And the big thing is they work great when they bounce, right? And a lot of these you got to do on logarithmic. Sometimes you don't. But when they fall below these kind of lines, watch out below. And that's Dollar General. Okay, this one right here goes back to around 2010. You can see bounce, going a crazy move right there up, comes right back down that line, bounces, gets a big bounce, right? And you can see, I mean, this was a big move up. We were talking about this one well before it happened. It's like a 60% move, whatever it is. But then when it falls below it, it's a waterfall effect because it's been that many years since it fell below it, and it just triggers a crazy amount of selling. So of course, once it breaks below there, whatever, I mean, you know, what is that, down to the 20% after that? And so now the stock's down like massively and everything, to the 25% actually. What's the total? Let me go to the weekly here. I'll show you what this thing is down now. And it's supposed to be in a strong economy, and yet the dollar stores are just garbage. Yeah, like almost 70%. So, you know, that's a hot mess. And so, you know, that's why they work, in my opinion. Let me know on the bottom if you got any other opinions on that. I always like to hear them and read them. Now, third one here says, I keep hearing about these companies running the ports making record profits. How is this possible, and why doesn't the government step in since we control the water they bring the ships in on? And I think you're right. The federal government does control the waterways, but not the ports. It's actually private companies and publicly traded companies and stuff. What's crazy, though, is look at this right here. One thing about this strike that brought out was how much profit these companies have been making, right? So they suffered an $8 billion loss pre-pandemic. But then once the pandemic broke out, all of a sudden, they were pocketing, in 2020, $16 billion in profits. That's nothing, though. Look what happened the next 2 years. In 2021, profits soared to nearly $150 billion, and the following year climbed even higher to $250 billion. I don't know how you pronounce this, Maersk, however you say it, saw its profits rise six-fold in 2021. The following year, the profits went even higher. And make sure you understand, we're talking about profits, not revenues. Okay, so this is the money they're pocketing going up that much. And so, you know, another reason we were sitting there going, wow, how come I'm paying this much for goods and stuff? Well, because that cost gets put over on us, right? Walmart's one of the biggest, I think the number one customer of all these ports, right? So that's going to get passed on. Now, how are they making record profits? It's like, because there's this illusion thinking we have this free market all around us, right? Here's the problem. In order to have a real, true free market, you have to have competition, okay? But what's happening in this industry and so many other industries is because of all the mergers that's been allowed to happen, bankruptcies, things of this nature, all of a sudden you got 4 of these companies. I'm actually going to read this, right? 4 container ship operators account for over half of the world's container fleet capacity. Only 4 in the world, over half the capacity, right? There's other industries. I'm going to get away from the ports for a second. But now I'm finding out after reading. I thought about doing a video on this after doing the research. Now what's happening is in the rental business, the rental industry, and I believe it's the meatpacking industry. It could be dairy, but I think it's the meatpacking industry as well, is against the law for company A to contact company B and try to fix prices. That is illegal, right? And so there's supposed to be competition. Now, again, these are another 2 areas, especially the meatpacking area, where the competition has shrank down dramatically. And so what is happening is there are companies now using AI and data mining to actually get all the information from all the competitors, which is not many anymore, in certain sectors like the meatpacking plant rental industries. And then those companies now can pay that company and circumvent the law for all of their competitors' data. And what they've noticed now, all of a sudden, because one of these cases just went to court, I think it's on appeal now, is that all of a sudden they're seeing rental properties just stay up here, and there's nothing like, usually you have companies come in trying to undercut the other because, you know, competitive pricing. That's why the free market's all about, right? And they're seeing that not happen, and they're going, what the heck is going on? Same thing in the meatpacking industry, I believe it is. And then one went to court, and they said, no, there's nothing illegal about that. And they're right. The law hasn't been able to keep up. But it's another use of AI and things of that nature, technology, to allow these companies, especially the large ones, they're the only one that can afford that data, to circumvent the law. And so that keeps prices elevated, or continues to have them go up, actually, if that is the case. And so I think you're seeing the same thing in the ports. How do you fix it? Look, I don't know. I don't understand why somebody wouldn't step in on that. But, you know, should we be surprised? Come on, man. I mean, I don't think so, you know. But if you have an answer, please let me know if you're an expert on ports. And because the problem is most of the companies are foreign companies. So I don't know. I mean, if they're not American companies, how does the American government step in and stop it? That's the question I would have, I guess. So anyway, hope that helps out on that one. Now, last one here says, my Saturday question is, what's your routine to get prepared for the market on a daily basis? Well, I keep mine as simple as possible because I like to trade the futures. So I just set up my futures charts, ES, NQ, MES, MNQ with my important levels and stuff that I like to put on there, and trend lines ready to go. And then Tesla and NVIDIA, the only charts I even look at as far as regular equities. I don't care about any of the rest of them, just because they get a lot of premium on their call and stuff. And when they get rolling, or puts, whichever one it is. And so, you know, my morning routine is getting up, getting my son breakfast, getting him ready for school. I go do my morning news brief for the members and stuff like that. Go in there and see how the data hits at 8:30, if there is any. Let the members know. See how the charts are reacting, all that fun stuff. So that is my routine and how I do it. So please let me know at the bottom how you do it and stuff. I know some people have a really extravagant routine, but you know, I just try to keep mine as simple as possible. So I hope you got something out of it. Please hit the like and subscribe button if you did. I'll set up next week. Tomorrow's video is going to be light on economic data. But remember, we start earnings season, and you saw what they did Friday with the unemployment data that came in. Just ran us up into the very end. So, you know, we'll see how they want to start off Monday, because we are in the second week of August or somewhere in there. So we should see, hopefully start to see, if it's going to be a turn, you would think it'd be between the 15th and 21st, but maybe they'll start it early. We'll have to find out. So anyway, guys, hope you have a good one. Thanks for watching, and enjoy the rest of your night.